So now that we're past our introduction, we can start to talk about what you can expect to find in your tax plan and what we're working to accomplish in your tax plan. The first thing we're going to put in a plan, the first section, is going to be dedicated to areas of potential exposure that we find when we review your financial records as well as your tax returns. So that's going to be broken up into two parts. We're going to have areas of exposure that we find in the financial records, and then we're also going to have areas of exposure that we find in your tax returns. So for this video, we're just going to focus on what we find in the returns, and then the areas of exposure we find in the books will be a separate video. The way we're going to structure this is I'm going to give you on this video the three most common things that we find that are considered exposure on tax returns, but that also happen to be the three easiest things that you can try to find by yourself. That way, after you've watched these videos, you can kind of go do a little self-evaluation and see if you have any of these areas of exposure on your own records. So the first thing we tend to see people doing wrong when they file their tax return is as simple as filing the wrong type of tax return, the wrong form. And this is typically done when you have a husband and wife who both own an LLC together, but maybe only the husband is a real estate agent. Well, because they're both on the LLC, it's considered a multi-member LLC. So what they'll do is they form this LLC, and the first year they file it, they continue to file the return under Schedule C on their personal taxes. But because their LLC is a multi-member LLC, by default, they're supposed to be filing a Form 1065, a partnership tax return for the LLC. So if they're filing a Schedule C for it, obviously that's not right. They can't be doing that. They're filing the wrong type of tax return for their LLC. The second thing we tend to see is names and numbers being wrong. Now, what do I mean by that? I don't mean, your name or your social security number. I specifically refer to the business name and the business EIN on the tax return being incorrect. So a common way that happens is you might have Bob's Real Estate Corp., but the tax preparer puts it down as Bob's Realty Corp. Well, it might only be a couple of letters, but now you put down a totally different business name than the one that's going to be reflected in the records. The name and EIN of your business on your certificate of organization, on your SS4, and likewise on your tax return should all be consistent and match with one another. Now, furthermore, when we say wrong numbers, it's not uncommon to see the business name, whether it's put on there right or whether it's put on there wrong, put on the Schedule C, but then under the EIN section, you have a separate line for the Social Security number and the EIN. The EIN is commonly not put there, even though it may have been registered. So now you have an EIN that was created, that was registered with this Internal Revenue Service, that is not technically filed a tax return because it wasn't put on the return, therefore it was never filed under that number. So the last thing we tend to see is, and this is the biggest one that is by far the most common and probably the biggest area of exposure I just see in general for real estate agents and real estate brokers, is they have an entity structure that is not allowed with the way they have it set up. And the most common occurrence of this is with S corporations. Oftentimes people are told to form S corporations, but they're not told what the requirements of the S corporation are. One of those requirements is for you to take a reasonable salary through payroll. The problem is a lot of people are not doing this, and by not taking a salary through payroll with their S corporation, they are completely evading Social Security and Medicare tax. This is just flat out not allowed. You can't do that. And so everyone who has a structure like that where they're taking everything through their K-1 and nothing through reasonable salary, they have a structure that's simply not allowed, and many of them will go for years like this before they get caught, and the IRS can then make you go back and reclassify a lot of your distributions as wages, which are now going to be subject to Social Security and Medicare. So I hope this was helpful, and I highly advise if any of this resonated with you, these three things I mentioned, you should go back and check your returns to see if you have any of these issues for yourself. So in our next video, we will cover the exposure we find on financial records, and I'll see you in the next video.